What's going on, guys? Bexio back, and today we got a brand new video with the stock market crashing yet again, and a couple of reasons why that could be happening. Obviously, we all know inflation, pretty big problem, and the Russia-Ukraine global geopolitics problem, also bringing in lots of uncertainty into the market. And if there's one thing the stock market hates the most, it's uncertainty. But before we get into all of that, if you are not subscribed, make sure to smash that sub button because we're on the road to 1,000 subscribers. But we can get right into all this kinds of stuff, starting with the inflation problems here. And you can see the Fed's bullard, so that's someone in the Fed, says inflation could get out of control, so action is needed now. So this, he came out and said this, and that made the market really think the Fed might start to get a little bit more hawkish on inflation. They might go after it a little bit harder than they did before, or than they were saying they were going to do. So interest rate hikes might be worse than expected, and things like them tapering might be accelerated, but they're kind of coming to the end of that already. So the big subject is the interest rates. You can see him talking here, saying we're at more risk now than we've been in a generation that this could get out of control. So inflation could get out of control. We know the spiral that can happen if you have wages need to go up. That means prices need to go up, and then people need wages to go up to be able to afford the prices, and then the prices go up again. So you get into this cycle of wages going up, prices going up, wages going up, and prices continue to go up. So it's a pretty big cycle that could happen because of this just inflation and wages and people wanting more money to be able to buy things, and you get into a crazy spiral. But he also says one scenario would be a new surprise that hits us that we can't anticipate right now, but we would have even more inflation. That's kind of the situation that we want to make sure it doesn't occur. So we know we had big inflation, 40-year high inflations in 2021, and we already hit 40-year high inflation reports in 2022. And if he's saying he thinks it could get worse, we could go to 10% inflation, and we all know inflation is around 15% right now for real inflation, not the CPI that is designed to stay low. We all know inflation's pretty insane right now. And his response to this would be to the Fed should front load the rate hikes to get ahead of inflation running at 7.5% this past year. So this would be exactly just opposite what the Fed was saying. So what the market was expecting, was pricing in, was thinking could happen, could be flipped on its head and just immediately thrown away with something completely new and harsher coming into play. And the one thing the market hates the most is uncertainty. So this would throw a wrench into everything, make it very uncertain. And then he finishes it up saying, it's not tight policy. Don't let anybody tell you it's tight policy. It's removal of accommodation that will signal that we take our responsibilities seriously. So, don't really know what he's trying to get at there. It would be tightening. If you're raising interest rates, you're tightening the monetary policy. And with not doing bond purchases, which they have been doing, and pumping money and liquidity in the markets, you're tightening the market. So it is tightening. You can't just say it's not tightening and think that people just say, yeah, it's not tightening. But so don't know what they're going about. But this last part, taking our responsibility seriously. We're about to see who takes their responsibility seriously at the Fed because of this new ruling that they just put in, which is that the Fed approves the rule banning its officials from trading stocks, bonds, and also cryptocurrencies. So if you are a member of the Fed, you cannot buy stocks, you cannot trade stocks, bonds, cryptos. And we saw that recently with a couple people that stepped down from the Fed because they came in, they were getting lots of money. They were getting rich off of buying before the Fed bought something and then selling after the Fed bought it because obviously they knew what the Fed was going to buy. So pretty big conflict of interest there. And if the Fed is supposed to operate in its own kind of thing to control the economy and inflation, you can't mix that with the market because inflation is really bad for the economy and for people, but inflation is really good for asset prices and stock prices and everything. So if you're making decisions on inflation, but you benefit from inflation, you might not have the best outlook on inflation going down. So with that, the Fed kind of fixing itself, trying to fix itself, and maybe going more hawkish on inflation. But the other half of this is the geopolitics kind of thing going on with Russia and Ukraine, where the entire world's watching and no one really knows what's going on. And that is the worst part for the market because that's insane unpredictability, uncertainness. They just have no idea what's going to happen. And something to tie the two together is the oil price. So we can see oil. This has just been skyrocketing, even just since December, has just been on a straight path up, it seems like. And that can come with the geopolitics and the problems with Russia and Ukraine and oil from Russia. Russia supplies so much oil to a bunch of places. And we can see this also ties into inflation. Obviously, gas prices go up and have been going up a lot recently because the price of oil has been skyrocketing too. So it just ties into inflation. It kind of ties everything together, and you get the mix of all of the problems. You get everything. You get the inflation, you get the Russia problems, the whole geopolitic thing is going on, and how is it going to get fixed? Nobody knows. We're all just sitting here watching it, seeing when it starts to get less uncertain. And if something happens, it would probably be the better outcome. If Russia officially just went away, it would be the best solution. If Russia actually just invaded and everyone knew what was happening, it would be a good solution as well for the market because that would be no more uncertainty. We would know what's happening. And the market typically does actually do well in times of war. Even it does bad leading up to it, but then good once the event happens. So it's really weird. But all of that won't stop some analysts from saying that the S&P will surge 20% by year end. The recession fears are overblown. And I mean, could he be right? Absolutely. Who knows what's going to happen? But 20% rally for the S&P would be pretty massive. That would be just like last year. For the index to move that much would be insane and would mean, I mean, the market is in a fantastic place if that actually happens. So if it happens, we shall see. But I wouldn't hold my breath for 20% returns on the S&P this year. Could be a tough year, but it also, nobody knows. So anyone who's telling you this year's going to be great or this year's going to be terrible, nobody knows. And anyone can be right, and we've seen it time and time again. People that make predictions on recessions make the predictions every single year until they get it right so that they can hang their sticker, their note on that one prediction that they got right, even though they had the predictions every single year for a decade leading up to that being right for that 1 year. So they're really wrong, but no one looks at the wrong ones for some reason. But we can also just end this video quickly looking at some channel favorites here. Plug Power, the massive sell-off. We really tried. We had a close above this line and a second close above it as well, but not a really good close. So obviously we fluctuated out of it and came back in. So what we wanted to see was a full candle kind of in here, a full 2 candles in here. Didn't happen, and now obviously we're out of it and back into this range. But it's really a result of the overall market and the overall fears that flooded in. Even Bitcoin under $40,000 right now, pretty insane. We were in this channel, we were doing great, and then the massive plummet here to come back down here, and you see kind of bouncing off this line. So maybe we try and come back into this red channel. We'll see what happens again. It's just the overall market and uncertainty, everything that's going on is just crazy for every single market. So nobody is safe. Everything is volatile, and it's just a crazy time for the entire markets, both crypto and stocks. And we'll see what the Fed does. They have a meeting coming up where they will make the first interest rate hike. If that hike is worse than expected, than it was expected before, then, I mean, we'll see probably more downside. But if it's the same or better, then we'll probably see a pretty good time in the market for that day at least. Because if the news matches expectations with this one Fed official, Bullard, coming out saying the Fed needs to triple down and go, do these rate hikes and be massive with them. But if they don't do that, then it will kind of signal the Fed's doing what they said they were doing. And maybe we see things actually start to get a little bit better. That's going to do it for this video. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next